welcome back. You're watching The Money Show on ET. Now it's time for our Meet Your Fund Manager segment. And since we are talking about investing in, markets abroad, in the US stocks, yes, there are specific funds that are classified as global funds or US funds, by various fund houses. But guess what? This is a multi-cap fund that still does have a couple of stocks picked from not just the United States, but from Japan as well. I'm talking about the Parag Parikh Long-Term Equity Fund, and the fund manager is Rajiv Thakkar. He's also the CIO of Parag Parikh Financial Advisory Services and Mutual Fund. Mr. Thakkar, thank you so much for joining us today on The Money Show. So to start with, yours is one of the few equity funds with global stocks in it. But still, it's not a global fund. It's a multi-cap fund. So how does it differ from, a global equity fund or an international equity fund?
So when one creates a portfolio of Indian stocks and Indian mutual funds, and then goes and buys, let's say, a fund of fund or a US mutual fund, one gets exposure to both markets. That is true. But at the same time, one is exposed to the factor that there would be overlaps in the sectoral allocations. So, for example, if you have a fund here and which owns things like HDFC Bank or Kotak Bank and ICICI Bank, and if you buy a US fund which will own, let's say, a Wells Fargo or Bank of America, so there would be overlap in sectors. When one has a single fund investing across markets, one can pick and choose the best opportunities across markets. So, for example, the global tech kind of companies are not available in India. At the same time, e-commerce kind of companies are not available in India. So one can go outside and invest in those companies. The other advantage in our view is that when you combine 65% Indian equity plus up to 35 of global equity, the taxation is at a preferable rate. So you get the benefits of Indian equity taxation where the fund becomes a long-term holding after 1 year, and you have a 10% capital gains tax. So that's the difference. Otherwise, from an asset allocation perspective, you get global exposure even from a fund of fund or directly buying overseas stocks or buying an overseas mutual fund.
Well, you know what? Your fund has also done very well, perhaps thanks to the high exposure to, the top class technology stocks in US, in India as well. So let's talk about IT. What, are you confident that IT and consequently your fund can continue its strong run?
So in any investment, there are positives and there are risk factors. One has to be mindful of both the aspects. So in the pandemic environment where there's a shift from, let's say, physical stores to e-commerce. There's a shift from, let's say, office computing to work from home kind of environment, linear TV to streaming services, print and outdoor media to digital media in terms of advertising. So all these trends are benefiting companies like Microsoft, Amazon, Google, and Facebook. But at the same time, there are risk factors. So one has to be mindful of the risks surrounding antitrust regulation or privacy laws and things like that. At the current point in time, we still think that this is a attractive opportunity to invest in, but we keep evaluating the pros and cons on a ongoing basis, and we decide based on the prevailing situation.
Okay. Well, Mr. Thakkar, let's talk now about the latest SEBI regulation. Yours is a multi-cap fund, so it will be impacted by the SEBI regulation. Have you decided, what the plan of action will be for the Parag Parikh Long-Term Equity Fund? What can the fund holders expect?
Sure. So if one looks at the developments in this space, the circular came out on a Friday evening, September 11th. And there was a lot of feedback from the print and electronic media, from clients, from financial advisors, from distributors and fund houses. So on Sunday itself, SEBI came out with a clarification press release saying that there are various options, and it's not that anyone will be forced to uh, change their investment pattern. Fund houses have various options, investors have various options. Also, AMFI made a representation in the week following that, and I believe consultations are going on between AMFI and SEBI. So I don't think the final word has yet been said on the regulations. But even assuming that the current guidelines stay as they are in terms of having a minimum 25% allocation to small cap stocks and 25% to mid cap stocks, given that we run very limited number of schemes, we can always choose another category. So our message to unit holders is very, very clear that unit holders have invested with us based on our current scheme structure, and they have invested with us over a 7-year plus period. And we will not fundamentally change the structure in any dramatic fashion. So if need be, we'll choose a different category, and we have multiple options. As I said, we can call it a dynamic fund, we can shift to the focused fund category, or a thematic fund or a value fund. So we'll decide in due course. Firstly, we'll wait for the final outcome of the AMFI and SEBI consultations, and then decide if we need to change a category and which category to choose.
All right. What's the screening or the filtering process for stocks for you before you consider buying them for the fund? Because like you mentioned, right, you look for opportunities not just in India, but in the United States as well. So what's the filtering process before you?
So the past track record matters a lot. So companies with a proven track record of earning a decent return on capital employed across a cycle, those are the kind of companies we prefer. We prefer low leverage companies, companies with a management which is minority shareholder friendly and which has the capability to grow the business over a period of time. So these are the broad filters we have for covering various companies. Our research team is structured on sectoral lines. So a person tracking a sector in India will be the same person tracking global companies in that particular sector. So someone looking at a Wipro, Infosys, TCS in India will be also be looking at a Cognizant or Accenture in the global markets. And the criteria is more or less similar for both the global companies as well as the US companies. And finally, after covering, we wait for a right opportunity in terms of valuation, at which point in time we'll buy.
All right. And finally, just as we wrap it up, Mr. Thakur, what we've noticed is that many mutual fund investors have been redeeming mutual funds in the last 3 months, perhaps trying to book profits, especially as many may also be facing a cash crunch. What would be your advice to them?
Yeah, you rightly said that if you have a cash crunch or if you need money to meet day-to-day living expenses or some emergency requirements, then obviously there's no option. People who are worried about the choppiness and the ups and downs happening in the market should realize that it is a part of a journey in the equity investing space. And if one looks at any of the indices, be it BSE Sensex or be it Nifty, over long periods of time, you will find that events which looked very, very large in the past, with the passage of time, don't look that dramatic or don't look that severe. So whether we talk about the 9/11 attacks in the US, or whether we talk about the global financial crisis, over a period of time, every adversity has been overcome, and we tend to go higher in the next cycle. So people should not get unduly perturbed by the past returns at this point in time or by the volatility. we have already seen through the toughest times in the current crisis, and hopefully things will be better in the days to come. And people should stick to their asset allocation, which is decided based on their risk taking capability, their age, their nature of income, expenditure, assets, liabilities, their financial goals. So they should have a proper asset allocation in place, and they should stick to the plan.
All right. Well, Mr. Thakkar, it was a pleasure having you with us. Thank you so much for talking to your unit holders as well today of Parag Parikh Long-Term Equity Fund. Well, let's move on now and touch base on the PGIM India Mutual Fund Retirement Readiness Survey for 2020. And this report certainly has brought about some very interesting insights. It's revealing the nuances of a country's that is, well, in considerable flux. These new social norms, spending patterns seem to be displacing the old, and it's showing that Indians are now focusing more on current expenses than future planning, and reveal that retirement planning is positively correlated to income, not age, showing that Indians actually plan for retirement when they have surplus money and can save without sacrificing on the current comforts. Priorities such as children and spousal security and even fitness and lifestyle, in fact, ranked higher than retirement. In fact, 65% of Indians say that retirement planning advice from an employer would actually increase loyalty to the organization, and a whopping 89% of Indians feel unprepared for retirement, do not have any alternative income. Furthermore, barely 1 in 5 Indians have actually considered for inflation. That too at a time when we are looking at a 7% inflation figure when they are planning for retirement, which could be 20, 30, 40 years away. Further, 51% of people who have planned for their retirement also have some form of alternate income, thus confirming the fact that you will plan for retirement only when you have some other surplus income without sacrificing your current comforts. It's certainly interesting, throwing on board a very different, financial habit that Indians traditionally have been practicing. Okay, well, for now, let's take a very short break right here on the show. Don't go anywhere.